What we should see is Bitcoin gets less and less volatile over time.
There's been plenty of downward vol. There's been tons of upward volatility. It's just that, dude, the asset's maturing. As it grows and grows bigger, volatility will decline. That's good for everyone.
But I am going to put this prediction out there that I think Bitcoin's going to continue to be volatile. Crypto is going to be insanely volatile. But I think generally the trend is down over time. And
I will send you the picture. I tweeted it out, but you're 100% right. It is inextricably down.
Well, I would love if someone out there is very markets oriented and has a distinct, opinion or a very opinionated stance on Bitcoin volatility and crypto volatility. I would love to talk to you and tell me why I'm wrong.
Today, I'm going to be taking Jack up on his offer and exposing the 3 reasons for why Bitcoin's volatility could actually rise from here. Most people think that now that we've got these ETFs, we're never going to see those crazy 100x rallies like we saw in 2013 ever again. Most people think that the best returns are behind us, but that might not entirely be true. So the first reason for why Bitcoin's volatility might rise from here is the fact that it is a technology. Now again, this is interesting because nearly everybody in the Bitcoin space agrees that Bitcoin's a technology, but they also all agree that Bitcoin's volatility is going to decrease from here. And when we have a look at the adoption curve of any technology that has gone mainstream in the past 100 or 200 years, we can see that not one technology has actually seen decreasing returns or decreasing volatility in its adoption after being 15 years old. It's never happened. The internet's adoption got more volatile after its first 15 years of adoption. The same was true for automobiles. The same was true for the smartphone. Why would Bitcoin become less volatile in the future if it's only adopted by 0.1% of the population today? Now, again, I know that the Bitcoin price isn't directly correlated to the adoption level of Bitcoin. We're going to talk about those differences a little bit more later on in the video, but I think the point stands on its own. It is very, very early in Bitcoin today. It's only adopted by 0.1% of the population. I do think that we are kind of closer to that inflection point in adoption than most people think. And I do kind of think that we have entered a second era, or as Michael Saylor might say,
Bitcoin gold rush era.
Okay, so I think this idea of a digital gold rush is a fascinating idea, okay? And I think it's clear by now that a lot of these big institutions are coming, okay? We've made videos recently talking about the fact that we now have hundreds of pension funds buying into these Bitcoin ETFs. Even the 13 of the largest 25 pension funds recently got exposed for buying these Bitcoin ETFs. So all of the big money is here, right? But some people will still say, but Luke, the trend is clear, okay? We have diminishing returns. For us to break these diminishing returns, you're going to need to see a ridiculous amount of capital come in to push the Bitcoin market cap up. And this is all true in theory. In theory, we do need a ridiculous amount of capital to come into the Bitcoin space to push that $1.3 trillion market cap asset that we have today to these extremely large figures and numbers that I think we will see. Now, this is correct in theory, but in practice, I think it ignores a very, very big component that everybody is overlooking, okay? Before we explain what that is, it's obviously clear. The data has showed us that Bitcoin has seen diminishing returns over the past 15 years. We got a 100x rally in 2012, we saw a 33x rally in 2017, and we saw, again, smaller returns in that 2021 bull market. But all of these ideas of diminishing returns ignores the fact of supply. And I think supply is obviously the most important part of this equation because you guys know what they say, price is set at the margins. And these ideas of diminishing returns kind of ignore the supply equation. All of these people saying we're going to see diminishing returns point to the fact that Bitcoin's a $1.4 trillion market cap asset now, and they say it's going to be impossible to see another 100x in Bitcoin, or even a 33x in Bitcoin, like we saw in the 2017 bull run. They say we're never going to see that again because Bitcoin's just too big, okay? It's a $1 trillion market cap asset. I think it's impossible that Bitcoin could be a $20 trillion asset in under 12 months. But again, I think supply is the most important part of this equation. So eventually, these public companies are just gonna have to buy at least $1 billion worth of Bitcoin, okay? And again, there's 58,000 public companies in the world, and eventually, every single one of them will hold Bitcoin, okay? So I think these are the indiscriminate allocators to Bitcoin who will overwhelm the hodlers who are taking profits, okay? Because this is another big thing that I hear a lot of people talk about. They say, oh, but Luke, won't there be a lot of hodlers who sell their Bitcoin once it hits 100K or 200K or in the next bull market that we see, okay? And that is true, okay? We know that hodlers take some profits every single cycle, okay? We can see it as clear as day, but I feel like maybe something changed in 2021, okay? If you go back and actually have a look at the data, we can see that there is at least 500,000 coins sent to the exchanges in those 2013 and 2017 Bitcoin bull markets, but not 2021. There's only about 150,000 Bitcoin sent to the exchanges in 2021. That's not even enough Bitcoin sent to exchanges to satisfy Michael Saylor's demand for Bitcoin, okay? He's got over 210,000 Bitcoin, okay? We only saw 150,000 Bitcoin sent to exchanges in that bull market. So I think when we do get public companies entering the space in a big way in the, let's say, not too distant future, I think that their demand for Bitcoin is going to completely eat up all of the supply that is potentially put on the exchanges. But I mean, who knows what's going to happen? Maybe there's hundreds of thousands of coins sent to exchanges in the next Bitcoin bull market. Maybe we only saw 150,000 coins sent to exchanges in 2021 because it was a muted bull market and a lot of people expected the price to go higher, okay? Again, I don't know what's going to happen with coins being sent to exchanges. I don't even know if Bitcoin's volatility will rise or whether it will be lower in the future, okay? I'm just making this video to kind of say, hey, look, pretty much everyone in the Bitcoin space believes this one thing. They believe Bitcoin's volatility has to go lower, and I just don't see a lot of people talking about these other arguments, okay? So again, I don't know what's going to happen in Bitcoin. Nobody does. Nobody knows what's going to happen in the short term or the medium term, okay? All I know is that financial markets always punish the common consensus, okay? When too many people are on one side of the boat, you know what happens. And again, I think we're seeing something similar in the Bitcoin space with this idea of Bitcoin's volatility, okay? This is why I think Bitcoin's best percentage returns are actually in front of it in its next 15 years, as opposed to its first 15 years. And that gets really interesting because that's when people always ask me, Luke, how much Bitcoin do I need to get rich, okay? If Bitcoin's best returns are in fact in front of it, how much do I need to get rich? Well, in a recent video, we actually ran the numbers. And what we did was we applied a Pareto's principal distribution onto the Bitcoin standard. And we showed you that you can become a part of the new millionaire class with only 0.015 Bitcoin. Now, before you call us crazy, yes, that's only $975. And if you want to learn how that could put you in the new millionaire class on a Bitcoin standard, you're gonna want to check out our maths in the full video linked right about there. And with all that said, thank you so much for tuning in. We hope you enjoyed this one. We'll see you in the next one.